Published 21:56 Eastern Daylight Saving Time, the 28th of July 2018. Updated 3:27 Eastern Daylight Saving Time, the 29th of July 2018. The Russian government has sold off the vast majority of its holdings of US Treasury securities for reasons that remain mysterious, in a dramatic move that experts are calling unprecedented. A U.S. Treasury report released on July 18 shows that Russian holdings of Treasury securities declined by 84% between March and May, down to just $14.9 billion from March holdings of $96.1 billion. The report was issued quietly amid the controversy surrounding President Donald Trump's July 16 meeting with Russian President Vladimir Putin in Helsinki, dropping Russia from the list of major treasuries holders without comment. Benchmark 10-year Treasury note yield saw a spike during mid-May to a 7-year high of 3.11%, possibly indicating excess supply during the sell-off. But yields quickly stabilized, indicating that any Russian bond dumping had little effect on the overall market or the U.S. government's cost of borrowing. 2 days after Trump's July 16 meeting with Putin in Helsinki, above, the U.S. Treasury reported that Russia had sold off most of its Treasury securities in April and May, baffling investors. The chart above shows Russian holdings of U.S. Treasuries from 2011 through May of this year. Investors are mystified by the move, which reduced Russia's Treasury holdings to levels lower than those of Kazakhstan, Peru or Colombia at the end of May, according to government data. Some are speculating that Russia was reacting to U.S. sanctions, in a possible preemptive move to divest assets before they could be seized. Russia's financial sector, including some top state banks, are essentially barred from U.S. capital markets by the sanctions. A new round of sanctions took effect in April, targeting 24 Russian oligarchs and 12 related companies, in response to accusations of worldwide malign activity by the Russian government. It's also possibly that Russia has moved its Treasury holdings offshore, wrote Bloomberg columnist Brian Chapata, noting that the Cayman Islands holdings are up $20 billion over the past 2 months. The yield on a 10-year Treasury note is seen above from January 1 to present. A massive sell-off would be expected to create a spike in yields, raising the cost of borrowing for the U.S. government. The spike above in mid-May represents a 7-year high, but soon stabilize. A third possibility is that Russia predicted a move in the market, and hoped to take advantage. If so, such a market move has yet to materialize. If the Treasury's dump was an attempt to drive up the cost of U.S. borrowing, it failed. The 10-year yield rose only 11 basis points from the end of March to the end of May. The market now has the answer to what would happen to Treasuries if a major holder decided to sell everything. Ian Lingen at BMO Capital Markets jokingly told Chapata. The answer, in this case, essentially nothing. China remains by far the largest holder of U.S. Treasury securities, holding $1.18 trillion at the end of May. Japan is second, with $1.06 trillion.